Ira Epstein with the Financial Market Wrap-Up, your weekend edition for this Friday, the 18th of February, 2022. So on the weekend edition, we're going to just look at the weekly charts to get the longer-term picture because the dailies have been treacherous to trade. I appreciate what certain of the TV analysts, and they could be on CNBC, they could be on Bloomberg, Fox, they're all saying the same thing. It is hard to trade in these markets. You wake up, they do one thing, day goes on, they're completely different, and then you don't know what you get the next day. Follow through, very difficult. So weekly charts, get rid of that daytime action, and that's one of the ways to look at it. The other thing you have to do in markets like this is trade a bit smaller. Always remember that. You don't need to be a hero every day, and in futures especially. Smaller, maybe go to those mini and micro contracts for a lot of all this because you still get the action, but you don't get the violence if you're wrong and the market gets a piece of news. Now, we have President's Day, so the markets have abbreviated trading sessions in futures. Many of the markets are open Sunday night. They'll finish at noon on Monday or thereabouts, and then they reopen at 5 o'clock on a lot of them. Keep your eye on the grains. They rarely open on that evening edition, but check with your brokers. Got it? I've sent out to all my clients just what's going on. President Biden came on Friday afternoon and held another news conference and said he fully believes, he's committed, that Russia is going to invade the Ukraine. He always hopes diplomacy can work, but he said he expects they're going to invade. In his own words, there's 150,000 troops there. And all the intelligence he has says that is the game plan that's going to happen. Now, I'm hearing as high as 190,000 troops on different stations, and I'm reading that in the press as well. I have said that I think that you don't put that many troops on a border just to see how well they're going to look. Can you imagine being cornered in Ukraine all the way around and at sea with that many people? Those people have to be nervous about that. The area has already seen some fighting between the separatists and the Ukrainian army. That could be the pretext for Russia to say, enough of this. We got to protect the people that want to be with us. Move in. You don't know. The sad part is the president's constantly saying we will send no troops there. I guess he's trying to assure the American people. But what are they going to give? All the money to the Ukrainian army that doesn't stand a chance against those people. Don't get me wrong. In World War II, the groups that did survive, and there were plenty of them, they went in and they made life miserable for the German occupying forces, and that is probably what's going to happen in Ukraine, depending on how far Putin, if he goes in, it's a big if, but if he goes in, wants to go in. What cities is he going to go to? What's he going to try to do? That is the big unknown in all this. The known is that he'll take what he wants, and it won't stop here. If he wants another breakaway country, who's going to stop him if they're not a NATO member? That is what you're dealing with, and he's going to exert his power. The Olympics aren't over. When they end is probably the most likely time, given he hasn't attacked yet. You'll just find out. When we take a look at the market, the S&P down again, down another 3.5% this week. If you take a look, last week the market was down 5.3, so you add them together, you're about a 9% decline, up 4, down 0.7. So you're not quite 10% off the high because you have to add back what you lose as you're up here, then you lose back 5.4, 5.37, but you got to go to where you were. Okay. The market could be wanting to get back to that 4,117 level. I don't know why I said 41. It's because the stock market, the Dow looks the same. But as you can see, the market's on the defensive. When you go to a weekly area chart of closes, well, you've come well off this market, and you can see how that's doing. So keep in the back of your mind, this is a monthly chart. We still have time to go for the month, but it's down pretty hard. On a weekly basis, down 1.5%. You're down here 1.85. That's 3.85. Add back, so you're about 2 down. Then you come back into these. You see what I'm doing? I start adding up how much you're down. That's all. And you've got a good amount that you're down. And this is a new break low off the decline of 458.50 on a closing basis. When we take a look at the charts, you can see how the market had a bounce and it's pulled back. The weekly charts are in a full-out bear camp. Lower highs, lower lows, unless the market gets back over 45.86. The resistance has become, on rallies now, the 18-week average. Prior to this is always fun to show, the market had that as support. Then as the market rolled over, and you'll see that right through here, the first test against that average failed, and this is where you're at right now. If the market wanted to leak completely away, 38.71, the 100-day average is a target. More likely, this is your first stopping spot. Right here, the Bollinger Band. If you take a look at what the market did, it had fallen down, got to that Bollinger Band, fighting the battle, from there back to the 18-week average, and right back down onto it today. You still, if you let go, let's assume the invasion happens, market could drop that amount on you. It's another 500 points. When you take a look at momentum, it's down. Trend down, bias down. You're at a major support area, but will it mean anything if the invasion takes place? And then how drawn up is it? And what do the press look like over and over? Obviously, diplomacy works. Something magical happens. You get over 45.86. This part's over. And then you go back to fighting the normal inflation stories, which are going to be plentiful as we start approaching March. Remember, we're not that far away from when the Fed said the liftoff is going to happen on interest rates. I don't think anybody doubts that. Half point, quarter point. That's the only argument on the table. In the weekly chart of the Dow, if you step back with me and look, the bigger picture is you've been going sideways, whipping back and forth, and haven't gone anywhere for almost, I know this sounds crazy, since back here in the August time frame. I mean, that's just the reality of the situation. It's been one of these waves of action. You are back in the bear camp. You're at the major support zone. We can see the resistance is the 18-week average. If that gets let go, invasion, whatever causes it, 31,139, that's the next main moving average. Could that be the target? You're at the first target, so you're on it right now. In the NASDAQ, it's let go of everything. So again here, you've been letting go. You're riding the lower Bollinger Band. This is even more bearish than the other two charts. Once a market latches on like a leech, hate to use that term, but it's true. And once it grabs hold, it just, I'm going to stay there. I'm going to suck the blood out of the market. And that's what it's doing, maybe down to that 12,900 level. You know, interest rates are the enemy of many of the tech companies. Roku got smashed today if you were looking at that. So it's the companies now that are getting hit that as we're coming out of the COVID situation and preparing for the April time frame, as spring rolls around, you know that. You know, you have the Daytona 500 this weekend in Florida. To me, that's the kickoff of the spring season. It may not be to you, and I know we're in the depth of a winter storm, but I always consider that. You know, it's the very beginning as I'm starting to look. The auto racing's coming back. F1 will be racing again very shortly. It's the beginning of the season for that, and it happens very fast. But as that's happening, I'd be very nervous that you could be going back to that 100-day average. Watch last week's highs, not this week, last week's highs in all the stock indices. If they're taken out, it's a good sign that this market has seen it on the downside in the near term, a pause of the break. Barring that, even the Russell can come back to the 100 and lower Bollinger Band. It's not going to stand there on its own if all the other indices fall apart around it. And it's been doing a better job. I've said that for a while. It changed its course. The trade likes it. But if everything around it goes, it stands zero chance of holding up. In the 30-year bonds, you keep drifting down here. The only reason you're getting good bounce this week is because the market is petrified of what an invasion means. All right, how bad does it hurt world economies? Does it spread? Does it become nuclear in nature? I know nobody's saying that. That's not reality. Russia's a major nuclear power. They're doing, as this is all going on, they're doing nuclear tests. You think that's not a message? So I am not saying that'll happen. It could be the end of the earth. I had one wise guy saying, you know, they can do their own bombing there and start off the Article 5. They're not going to start a nuclear war. They don't have to. They can take what they want. They're on there right now. It's Putin's for the taking. In the 10-year notes, lower highs, lower lows. You latched on. Remember what I just said, how you latch on to these things? And that's what happens. You got to learn to recognize that. If you haven't taken my enhanced Bollinger Band course, it is so important that you do so. It's on our website under the word education. It's www.iraepstein.com. And you've latched in with the embedded reading. So the rallies in this market off the invasion, yeah, but they're selling opportunities so far. What else happened on this chart? The 100-week average just got under the 200. That's a major crossover signal. In the dollar index, the market keeps falling back into the 200-day average, this light gray number, holds that in the 18. Until you break through that, the dollar's got a bid here. The dollar will probably fare fairly well as if on the invasion, but I think the dollar's not going to do well when the Fed starts raising interest rates. And you'll say, wouldn't that attract money? I think the market's smart enough to know that once we begin on that path, there'll be more than one of them, and that tends to slow the economy down, especially if the Fed wants to be aggressive. So I don't think that's necessarily as bullish the dollar as a lot of people think, but it is bullish on the chart action right now, whereas the euro has no trend. The euro's got a higher high, lower low. At least in the dollar, we can argue higher lows, higher highs. You don't have that type of trend here. So no trend, bias down, momentum trying to point up. The chart is a mess. The Canadian dollar, they've begun arresting the protesters, right or wrong. Cities have a right to go on. It reminds me of Minneapolis in the States. Remember how the city was burning down and all the problems? People have the right to protest. Defend them all the way. They don't have the right to stop life in the city they're protesting in. And that's such a fine line and a difficult one. Trudeau is doing whatever he does to walk that line. There's pros, there's cons, but you'll be reading about it all weekend. In any case, every time you've been getting up to the 18-week average, you're getting thrown back right now as that protest's already 2 weeks old. In the Japanese yen, you know, if those troops go in, the yen gives you a pop. Could easily get back to the 87.62 level. It hasn't been trending. It has a higher high, a lower low. Each time it hits this Bollinger Band, you've got 4 of those instances, it finds its support. It's a very difficult number to stay under in this type of environment. When you get to the Bitcoin action, and as good as the market looked on the daily action, it looks terrible still on the weekly. You still have a constant pattern of lower highs and lower lows. Now, the market's got very large support at the 100-week average, 32,596, and the lower Bollinger Band. The market negates this long downtrend if you also take out last week's high, and that high was specifically at 45,905. But right now in this zone, this market still looks heavy to me. What about stochastics? Well, they're oversold. They haven't embedded. They're just oversold at this point. In the Brent WTI, imagine how this market took all this action, and we're all nervous this weekend about what might happen with all the new troop buildup, the end of the Olympics, doorways opening. You ran right back to the neutral zone on the chart. The 18-week average of close is fascinating. The trend's still up on the weekly basis in the Brent until that red line closes back under 80. You can get all that noise you want on the daily chart. The longer-term chart is still very bullish and hasn't given up anything. Did we embed in WTI oil? Both numbers here are over 80. Last week they were both over 80, and the week before that, were they? No. So January 28th, no. The 4th, yes. The 11th, yes. That's 2 in a row, 3 in a row with this week. Got it? So you're embedded, which means on these pullbacks, I am looking for the professional trader to be buying the break, bailing and getting out of it if the red line finishes the week with a reading under 79. In gasoline, on the weekly basis, Week 1, where both numbers are over 80. Last week they were over 80, but not the week before. Just an overbought market at any point here can give you a bit more of a correction in things, and that's where I'm going to leave it for you. Now, we write about all this, and we do it in a pretty neat way. For those of you that have been getting our newsletter, I get people that, they'll let me know, and they go, Ira, it's a tremendous amount of information. It spreads, options, ideas on futures, the outrights, what the cash market is doing, the weather situation. We have 2 meteorologists. I don't know if you're aware that we have our own on staff. And we really go into the grain markets, especially with what's going on in South America right now, and we hone in as to what it means. You have to also keep an eye on what's going on in China, as they're now cutting back on their soybean crushing for a while. Do you know what that means to the market? What's going on? We do. We write about it. It's in our newsletters. So if you'd like to see what we get, all you need to do is go to our website. Under free offers, it's on the far left after you get there. Sign up for them. You can even get my newsletters, my special ones that I'm putting out twice daily for my clients as to what I'm seeing. And I'm writing about that Chinese crush situation. My traders will have that for Sunday night. I'm Ira Epstein. You're not going to see me until Tuesday because of President's Day. Now, if the invasion happens, I might do an update and put it out there for you. Probably do one of them and cover what futures markets are open. The stock market's still not going to be open because of that. Tuesday's when you'll have me back for these. I'm Ira. You have a good day.